Welcome back, everyone. LAB has been moving sideways for several trading sessions, and while many traders are starting to lose interest because of the slow price action, this is actually the type of market behavior that deserves even more attention. Consolidation often feels boring, but experienced traders know that these quiet periods can lead to some of the strongest moves once the market finally decides on a direction. In today's analysis, we're going to break down the current LAB chart, discuss the most important resistance level, explain why our trading plan has not changed, and look at both the bullish and bearish scenarios that every trader should be prepared for. Before we begin, if you enjoy educational market analysis and technical trading updates, don't forget to like this video and subscribe to the channel. Also, remember that everything discussed in this video is for educational purposes only and should never be considered financial advice. Always do your own research before making any investment decisions. Now, let's get started. Over the past several videos, we've been focusing on one major price level that continues to control the entire market structure. That level is the resistance area around 90 cents. Despite several days of sideways movement, nothing has happened to invalidate this level. In fact, the longer price continues to consolidate below resistance, the more important this level becomes. At the moment, LAB is trading around 0.517 timber, remaining trapped inside a relatively tight trading range. Daily price movement has been small, volatility has dropped, and both buyers and sellers appear to be waiting for a catalyst before making their next move. When we look at the recent candlesticks, we can clearly see that neither side has managed to take full control. Buyers have not shown enough strength to push the price toward resistance, while sellers have also failed to create a significant breakdown. This balance between buyers and sellers is exactly what creates consolidation. Many new traders see this type of market and assume nothing is happening. However, professional traders often pay even closer attention during these periods because consolidation usually represents the market building energy for the next major move. Think of it like a spring. The longer the spring is compressed, the more energy it stores. Once it is released, the movement can be explosive. Financial markets often behave in a very similar way. This is why patience is one of the most valuable skills in trading. Successful traders understand that not every day will provide a trading opportunity. Sometimes the best decision is simply to wait for the market to confirm its direction. Our overall trading plan remains exactly the same as before because price has not broken any key technical level. The first scenario is the bearish setup. If LAB continues higher and reaches the resistance zone around 90 cents, we will carefully monitor how price reacts at that level. Resistance is an area where selling pressure has previously entered the market. If sellers once again defend this level, and we receive strong bearish confirmation, such as a bearish engulfing candle, rejection wick, or another clear reversal pattern, then this would provide evidence that sellers remain in control. If that confirmation appears, our downside target remains approximately 8 cents. It is important to understand that we never enter a trade simply because price touches resistance. We always wait for confirmation first. Confirmation reduces unnecessary risk and helps traders avoid entering positions too early. Now let's discuss the bullish scenario. Markets do not always respect resistance forever. Eventually, if buying pressure becomes strong enough, resistance can be broken. If buyers successfully push LAB above 90 cents with strong momentum and a convincing breakout, our analysis immediately changes. A breakout alone is not enough. Many inexperienced traders chase breakouts, only to watch price reverse back below resistance. This is why professional traders often wait for something called a retest. A retest happens when price breaks above resistance, then returns to test that same level from above. If the old resistance now acts as support and buyers successfully defend it, this provides much stronger confirmation that the breakout is genuine. Only after seeing that successful retest would we begin looking for long opportunities. If this bullish scenario develops, our upside target remains around $1.90. This creates two very clear trading plans. Scenario 1. Resistance holds, bearish confirmation appears, and sellers target approximately 8 cents. Scenario 2. Resistance breaks, support holds during the retest, and buyers target approximately $1.90. Until one of these scenarios happens, there is no reason to change our analysis. One mistake many traders make is constantly changing their trading plan every single day. They become impatient during consolidation and start drawing new support and resistance levels, entering random trades, or abandoning their original strategy without any technical reason. Professional traders do the opposite. They create a trading plan, identify the key levels, and then simply wait for price to provide confirmation. This disciplined approach removes emotion from trading and allows decisions to be based on probabilities instead of fear or excitement. Risk management is equally important. Even if one of our setups eventually triggers, no trade is ever guaranteed. Every professional trader understands that losses are part of the business. That is why proper position sizing, stop-loss placement, and disciplined execution remain essential components of every successful trading strategy. Never risk more capital than you are comfortable losing, and never assume any setup is certain to succeed. As we move into the coming trading sessions, keep a close eye on overall market momentum. If buying volume begins increasing and volatility starts expanding, there is a greater chance that LAB will eventually challenge the 90-cent resistance area. On the other hand, if selling pressure increases before price reaches resistance, consolidation could continue even longer. Either way, patience remains the best strategy until the market clearly reveals its next direction. Remember, the market always rewards disciplined traders over emotional traders. So don't let slow price action convince you that nothing is happening. Sometimes the biggest opportunities appear immediately after the quietest periods. To summarize today's analysis, LAB continues trading around $15.17 and remains inside a consolidation phase. Our key resistance level at 90 cents is still completely valid and continues to control the overall market structure. If price reaches this level and produces strong bearish confirmation, we will look for a potential move toward approximately 8 cents. If buyers successfully break above 90 cents and the level turns into support after a clean retest, we will then look for buying opportunities targeting approximately $1.90. Until one of these scenarios plays out, the smartest approach is to stay patient, avoid emotional trading, and allow the market to confirm its next move. Now, I'd like to hear from you. Do you think sellers will continue defending the 90-cent resistance level? Or do you believe buyers are preparing for a breakout toward $1.90? Leave your opinion in the comments below because I'd love to hear your analysis. If you enjoyed today's market update, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss future crypto market analysis. If you're looking for more detailed chart breakdowns, educational content, and premium trade ideas, be sure to join our crypto VIP community. Thank you so much for watching. Stay patient, stay disciplined, manage your risk, and I'll see you in the next video.